us based on registration. But we will get started so that we don't run late if we can help it. So again, welcome to the Virginia Agricultural BMP Cost Share Program Training course. I'm Carl Thiel-Goen, Conservation Planning and Training Coordinator for DCR. Today, Sarah Bottenfield, who is our Agricultural Incentives Program Manager, will be leading the presentation and answering the majority of your questions. As you see on her slide, if you have any questions today, just put them in the chat box. Both myself and Darby from the association will be monitoring the chat box for questions, and we'll try and interrupt Sarah as we go along to get those answered. And unless anybody has anything else, Sarah, I'm going to turn it over to you and let you get started.
Okay, thanks, Carl. Can you just confirm that you can hear me?
Yes, we can hear you well.
Okay, thank you. All right, so as Carl said, I'm Sarah Bottenfield. I'm the Agricultural Incentives Program Manager. I took over from David Bryan almost a year ago now in that position. And if there are folks on here that I haven't met yet, hopefully I will soon. And I will go ahead and get us started. So just a overview of what we're going to talk about today. I'm going to go over some of the history of the VACS program and then talk through some of the program guidelines, not nearly all of them. There's plenty if you've gotten a look at our manual, but I'll try and hit the highlights. And then I'll go in and talk about some of the key, most common VACS practices, and very briefly just touch on CREP. We do have a break built in about halfway through, so just know that that's coming up. So the VACS program is a partnership between the Soil and Water Conservation Districts and DCR as established in the Code of Virginia. And there are three main aspects of this partnership: provision of technical assistance, delivery of educational initiatives, and promotion of incentives to encourage voluntary actions by landowners and land managers. A little bit of the history of the VACS program. It officially began on July 1, 1984, with the goal of improving the quality of water entering the Chesapeake Bay and the Chewan River. So it was not statewide at that time, providing financial incentives to producers for initially 6 BMPs. So I think we now have around 70. The program grew. By 1988, it was statewide, although there was variation in the incentives and eligibility across the state. But the structure of the program that we have today was pretty much established then, with funds being distributed to the soil and water conservation districts based on how agriculture is impacting water quality in their area, local boards of directors approving prioritization of applications and funding the applications that were most likely to improve water quality. Over time, there has been an increased emphasis on the Chesapeake Bay watershed by policymakers, General Assembly. Currently, we have a 70-30 split of funding between the Bay and the non-Bay part of the state. As some of you may know, funding levels over time have gone up and down over the years, but the long-term trend has been upwards. And of course, in 2023, we have a record amount of funding, about $123 million. If we look back to when the program started, the entire program was just over $1 million. So VACS is a water quality improvement program. It's intended to reduce nutrient, sediment, and bacteria contamination of the waterways in Virginia. And this is important to remember as we work with some of our partners. They sometimes can address additional what we call resource concerns, but VACS really focuses on water quality. So for example, NRCS, who we partner with pretty regularly, they have all kinds of different resource concerns they consider. So air quality, energy. So just keep in mind, our programs may have different things that we focus on. The program is funded by the taxpayers of Virginia. And with that in mind, our goal is to maximize the nutrient and sediment reductions that we can achieve while protecting the taxpayers' investment and their interest by doing that in the most cost-effective way possible. So basically, we want to spend the least amount of money to get the most bang for our buck in terms of pollution reductions on a field-by-field basis. And if you haven't already heard this phrase, least cost technically feasible, particularly from our engineering staff, you certainly will. That is kind of the shorthand way that we refer to this idea of solving the problem in a way that is that technically meets the need at the least cost. So funding sources for the VACS program, statutorily, 10% of any state surplus goes into the Water Quality Improvement Fund. So as I'm sure folks know, we've had some years with large surpluses recently. So that has meant large contributions to the WQIF. Once that funding goes into the WQIF, there are some carve-outs for chunks of money to go to different special projects and other agencies, sometimes to DEQ or maybe Department of Forestry. But the majority of WQIF funds get deposited into the Virginia Natural Resources Commitment Fund, or VNRCF, which is where VACS is funded from. We also get some money from the real estate recordation fees that started in 2010 with $10 from every real estate sale in the Commonwealth going into the VNRCF as well. And there is some money, a chunk of money each year that goes into a reserve, a WQIF reserve, being funded by state surplus. Of course, there will be years that surplus is very small or non-existent, and so there is a reserve fund to offset those leaner years. Once funding is in the VNRCF, it is administered via an annual grant agreement between each Soil and Water Conservation District and DCR. Those grant agreements specify certain deliverables that the district will achieve in exchange for the funding. And the allocations to the districts are largely influenced by the non-point source assessment, which is completed every 2 years as part of this larger Virginia Water Quality Assessment Report. And DCR uses the agricultural part of that assessment, that non-point source assessment, which takes into account all kinds of different factors about land use and climate and animal numbers and stream flow. And using all of those data inputs, the pollutant loads for each hydrologic unit are estimated or modeled and then ranked as a high, medium, or low priority. So I'm actually going to go ahead and look at the map. You may have seen a version of this map before. It's included in our manual every year. But as those assessments are done every 2 years, this map and the hydrologic unit rankings can change over time. And with those high, medium, and low rankings, 20% of watersheds fall into the high category, 30% in medium, 50% go to low, and then the funding distribution is reversed. So 50% of funding goes to the the high priority watersheds, 30% to the medium, and 20% to the low priority. And then the makeup of those high, medium, and low ranked watersheds within a district helps determine how much funding is allocated to them. And you can see, looking at this map, you can see a lot of the high priority watersheds concentrated in the eastern part of the state. There's a lot of cropland that may have a higher erosion potential. And then also in the Shenandoah Valley, where there's a lot of animals and animal waste being generated. All right, so once the district has their grant agreement and some cost share has been allocated to them, they need to start getting some participants to sign up for BMPs. So districts should continuously take applications, but there are some options for how different districts choose to manage their program throughout the year. So they can do an advertised sign up period where they say, we're going to accept applications from this date to this date, or just give a deadline date. And then at the close of that application period, the applications will be ranked and approved according to how they rank out. Districts may also have a rolling sign up where they just take applications throughout the year and bring them to their board for approval at their monthly meetings as funding allows. Some districts may also use a combination of those two methods where they hold a sign up period and approve that initial batch of applications for funding, and then they can continue to take applications and make approvals until they run out of funding. We do encourage districts to continue taking applications even after their funding has all been obligated. It helps DCR know where there's need for more funding. If we happen to come across some funding that can be sent to a district to cover some need, or just if you have somebody cancel a practice, having those applications on hand can help you, switch those over to somebody else who needs them. So when you get an application, you got to figure out whether the application is eligible or not. So for the VACS program, the A in VACS stands for agricultural. So we are an agricultural program. The land that's being signed up needs to be used in a bona fide program of agricultural management and engaged in production of agricultural, horticultural, or forest products for market. There has to be a minimum of 5 contiguous acres and verifiable gross receipts in excess of $1,000 per year from the production or sale of the agricultural, horticultural, or forest products produced on the applicant's ag land for each of the past 3 years. There has been in the past some questions about how commercial equine operations fit into that, and they are eligible for funding as long as they meet the 5 acre, 3 years, and $1,000 requirements. If the district has any question about whether a participant meets these qualifications, they are fully within their right to request some sort of financial records to show proof of agricultural production. So that might be something like the participant has filed a Schedule F with their taxes to use as documentation. So eligibility is tied to the land, not to the participant. So if a new owner or a new lessee takes over some land that has previously been farmed, it's still eligible, even though that participant doesn't have the the 3-year history on that piece of land. So if you run into this where land has changed hands and you're trying to figure out whether it qualifies, whether it's eligible, some of the resources you might want to look into are county land use records, you can check with FSA to see if the previous producer had any records with them to know what was being done on that land. Or you can check to see if the previous owner participated in the VACS program recently. One note that land owned by municipalities or state or federal government agencies is not eligible to receive cost share or tax credit. Technically, if a producer is renting land that is owned by a government agency and the contract is with the producer or the renter and not the government agency, that would be allowed, but it's not recommended. So there are situations where land, a farm will be on the border of possibly a state border. North Carolina is probably the most likely. So when you have a farmer with land on the border, farming on the border, any fields that they want to sign up for VACS are only eligible if a portion of that field is within the Commonwealth. Entire fields that are outside of the boundaries of the Commonwealth are not eligible to sign up for VACS. The more common situation is going to be land that crosses county borders and therefore district borders. So if you're trying to determine which district should administer the program for a particular field, look at the district that has the largest amount of acreage of that field. If there's any question, that maybe the farmer says, well, I think most of that field is in County A, and the two districts can't quite figure it out. Use the county boundary layer that is in the tracking program to make that determination. When any of these situations come up where a producer wants to sign up a practice with a district and the location of the practice outside that district's borders, the bottom line is that districts need to coordinate and communicate with each other. There is going to be more guidance coming on this for program year 24, but the key really is make sure you are in contact with your neighbors when these situations come up. So in signing up a participant, we talked about their eligibility requirements. There is a self-certification form. It's optional, but strongly encouraged because that really puts the burden on the participant to confirm that they meet those eligibility requirements rather than the district staff having to feel like they've investigated that thoroughly. You'll also need to get a W-9 form. That is required because VACS funding is taxable income. So in January, districts will issue tax information to the participants who have received cost share. Participant will also need to complete a contract part 1, which I think we're going to look at here in a second. You need to make sure that the part 1 is filled out completely. So all of their name, address, contact information. There is a box on that form where you ask about whether they're going to receive cost share from another district. It needs to be signed and dated. And it's really important that the information on the contract part 1 matches what is provided on the W-9. And then there is a lot of small print on the part 1, but you really need to encourage the participant to read that and make sure they understand it, and if they have questions, to ask them. And also make sure that the participant understands that the cost share funding is going to be considered income. So they take that into consideration for their taxes. But district staff should not attempt to give tax advice to the producers. If they have concerns or questions about what the tax implications are going to be, tell them they need to talk to their tax preparer. So this is the contract part 1, the top section. This needs to be filled out completely for the applicant. and it needs to be filled out with the same information that they provide on the W-9. And then this is the bottom section. About 2/3 of the way down is that question about whether they receive cost share funding from another district during the current program year. And then they need to sign a date. A couple of other notes on eligibility. The VACS program, DCR, has a well-established partnership with USDA through the Farm Service Agency, or FSA, and also Natural Resources Conservation Service, NRCS. And I'm not going to read through all of this, but there are Farm Bill requirements that USDA monitors, and if the district is notified by USDA that an applicant is in violation of any of those Farm Bill provisions, then they are not eligible to receive a cost share funding through VACS either. And of course, that is dependent on us or the district knowing about it. Additional eligibility considerations with state environmental laws. For example, the Ag Stewardship Act, which is administered through VACS, the Virginia Department of Ag and Consumer Services. And it's a complaint-driven program. And also with DEQ in their regulatory role, if there are problems identified either through a founded Ag Stewardship Act complaint or some potential violation identified by DEQ, and the applicant is working on addressing the problem, either they have an ASA plan or they are actively working with DEQ to get into compliance, then they are eligible for VACS funding, or assuming that the action they want to take is something we can fund through VACS, they are eligible to apply. Those situations become ineligible for VACS if they get to the point where an order has been issued, either a corrective order from the Commissioner of Agriculture for an ASA complaint or an enforcement order from DEQ. So effectively, there is a sort of voluntary phase where the landowner can receive cost share to address the problem when these other agencies are involved. But if they haven't taken action and either VACS or DEQ has to move to more of an enforcement phase, then they are no longer eligible for cost share. All right, so continuing to talk about eligibility and how the district needs to evaluate eligibility for an application. We have what we call priority considerations, and these apply to the entire program, all districts statewide, and an application must meet one of the priority criteria to be eligible for funding. We do have a number of exceptions to the priority criteria, which are called priority practices. And these are all listed out in the manual, but they include animal waste practices and other practices that have been identified to protect groundwater, prevent gully erosion, or critical area. And those practices are prioritized for funding regardless of where they're located. So, you know, if they, you can see the first item on the list of priority considerations is located in the highest ranked hydrologic unit. But a priority practice, even if it's in a lower ranked or a lower priority watershed, still receives priority for implementation. So in addition to our priority considerations, we also have secondary considerations. These are developed and used locally by each district to prioritize applications that address locally identified water quality concerns. So these consist of typically a set of written narrative statements, and this is accompanied by, may be accompanied by ranking worksheet. So the ranking worksheet, if it's being used, would assign a narrative or a numerical value to those narrative statements to assist with the ranking and comparison. But these secondary considerations are developed by each district each year, and districts have a good deal of flexibility to address their local water quality concerns. Specific practices cannot be prioritized, so you can't name a specific practice in your secondary considerations. Districts are required to use CEF in their application ranking process, and I'll talk about CEF a little bit more here in a few slides, but it stands for Conservation Efficiency Factor. And secondary considerations must be approved by the local district board and by DCR each year before any approvals can take place. So those will be sent to me and have to be approved. The district has to receive approval from DCR before they can make any approvals for the new program year. And secondary considerations, once they've been set, once they've been approved and submitted for the year, then they remain in place throughout the entire program year. They can't change because every applicant needs to be evaluated in the same way. So CEF is calculated in the Ag BMP tracking program, or CAS. You'll hear it referred to both ways. CAS stands for Conservation Application Suite. And anybody who's really new and hasn't used CAS yet, there is a training with Jen Edwards, I think, that you'll want to or need to take for that. So if you need that, get in touch with Jen or work with your CDC to get set up for that training.
Sarah, that's going to be on March the 10th.
March 10th?
Yes.
Okay, thank you. All right, so CEF is, it's automatically calculated in the tracking program based on the information that you've entered for your practice. It takes into account 11 different components that are weighted. There's some more detailed description of how CEF is calculated in the manual if you are interested in more detail. But the bottom line with CEF is that it's good for comparing like practices. For example, if you wanted to look at the CEF scores for all of your cover crop applications, it is not as effective for looking at very different types of practices. For example, if you wanted to compare a cover crop practice to an animal waste practice, it works much better for similar practices. And it can also be used as part of your secondary considerations and within a ranking worksheet if your district uses that for practices that are dissimilar, taking into account some of the other factors that are present. And with CEF, a lower CEF score is better. A lower CEF score means a higher conservation efficiency. Another tool that districts need to develop each year is their average cost list. So this is going to be done before, like secondary considerations, before the district can make any approvals for the new program year. And the average cost list is going to be basis for the practice cost estimates that the district develops. So spending some time to develop a good average cost list is gonna serve you well. You know, looking at practices that have been recently completed and the costs associated with those, your average cost list is going to have a cost for each component of the different BMPs that you're going to be installing. And this can get pretty detailed. You know, if you have costs for fence and for pipeline, you know, you've got different sizes of pipeline, you've got different types of fence. So, it is a fairly, or it can be a lot of work, but keeping up with that and making sure you get accurate costs on your cost list is well worth it. The districts do have to submit the average cost list to DCR before they can use it each year. DCR does not approve it. We just keep it on file. But like your secondary considerations, once the cost list has been approved by your board and sent to DCR, it is set for the year, for that program year. I think a year or two ago, there was a change that allows a change to be made to the average cost list during the year. We'll talk about that in a second. But your initial development of the average cost list is where you really have the ability to make any changes that you need to see from year to year. Districts can use the NRCS average cost list if they wish. Just keep in mind the NRCS average cost list normally comes out around the beginning of their fiscal year, which is October 1. And so if the district is using their list and with our fiscal year starting July 1, you may end up being sort of a year behind on the costs. All right, so districts can use an abbreviated average cost list with just their most commonly used practices if they choose. But there has to be some sort of contingency plan included on the cost list for how you'll handle costs for a component that comes up that is not already included on your list. That does happen, and typically that contingency plan is either to use the NRCS average cost or to have district staff research a cost and have the cost share committee or whatever the applicable committee from your board approve that cost. And as I mentioned, districts may not change their average cost lists mid-year, except in certain circumstances that are spelled out in the manual. That making that change requires both the district board and DCR approval. I just want to emphasize again that there is a process and there are certain circumstances where this is allowed. So just make sure if you are looking at making a change to your average cost list, make sure you are following the rules as they are set out in the manual. I am hoping in the next couple of months to offer a short training on secondary considerations and average cost lists as we move into the end of the program year and districts start thinking about developing those for program year 24. So look for some more information to come about that. All right, so each cost share practice in the manual has a cost share rate specified for it. And there are 3 different types of payment rates or cost share rates. There's a percentage-based rate, which you'll find in, for example, the WP4, that's their animal waste spec, and it's a 75% cost share rate. There are some practices that have just a flat per acre rate. For example, the SL8B and most of our other cover crops, you'll just see a payment of, for example, $45 or $60 or whatever it is per acre. And then there are some practices that combine those two and have both a percentage-based and a flat rate cost share payment. So for example, the SL1, which has a 75% cost share on the eligible component costs and a flat rate incentive payment per acre that depends on the lifespan that's selected for the practice. VACS funding can be combined, or as we call it, piggybacked with federal funds, such as EQIP funding through NRCS or 319 funds that might be available through DEQ. But those combinations can only pay the maximum cost share rate from the VACS manual. So let's say a WP4 that is receiving EQIP funding and VACS funding, the cost share rate is 75%. So it doesn't really matter what the split is, but the total cost share for that practice cannot be more than 75%. You're limited to 75%, whether it's 50% from NRCS and the 25% from the district, or it could be 74% and 1%. Doesn't matter. But the VACS cost share rate applies. So piggybacking or combining funding in that way is different from what we call double dipping. And so double dipping would be when participant is getting paid multiple times for the same practice. So as an example, somebody comes into the district and signs up their cover crop field for cost share. And then they also go to NRCS and sign up that same field, that same cover crop for cost share with NRCS. That's not allowed. That would be double dipping. Just a note on work completed by producers, where VACS is paying cost share and the producer is going to do their own work, which is not uncommon. The district should have the participant turn in a bill or an invoice for their work, and districts should have a plan to address self-billing like that with their average cost list to avoid intentional or unintentional gouging. So if a participant does their own work for a practice and then they turn in their bill where they've valued their time at $5,000 an hour, you need to have something in place to limit anything like that. But it is allowable for participants to claim their time, materials, equipment use, all of those costs, just like if they hired a contractor, the contractor's price would include all of those items. All right, I'm going to talk a little bit about engineering job approval authority. The DCR engineering services staff will go into more detail on this on EJAA during our June program updates and also during other trainings that they may offer during the year. So I'm going to keep this brief. But engineering job approval authority is a way for district staff to do some of the engineering work that is required for our various practice components under the oversight of DCR's engineers, who are Amanda Pennington and Ben Chester. And EJAA is something that is issued to the district staff by the DCR engineer based on the district staff's training experience and demonstrated competence with the aspect. So there's a table in the manual of the practices that require EJAA or require professional engineer, and which components of that practice it's required for. Most of our structural practices require some level of EJAA. And there are 3 categories. The first one, kind of the most basic one, being I&E or investigation and evaluation. And this is the ability of the staff person to make observations, plan solutions to the problem, and in fact, basically ask and answer the question, what's the problem on the site and what is the best practice to use to solve the problem? The next level or the next category of EJAA is design. So this is a pretty significant step up from I&E, designing and checking all aspects of the support data, drawings, and the specs to make sure that the planned practice will meet the purpose for which it is installed and that it will be able to function. And then finally, we have construction. This is you could say the highest level of EJAA. So that includes surveys, laying out a project, staking, inspection of materials and work, any testing to determine the job meets specifications. So developing and earning EJAA requires working under somebody who has EJAA to learn and be able to practice. And the whole EJAA program and the process of being granted EJAA is pretty strict because it's based on the engineering license of either Amanda Pennington or Ben Chester. And so when they grant EJAA, they are effectively extending their engineering license to the district staff based on the ability that you have demonstrated and that they've evaluated to complete these tasks. And I don't know if Amanda would love the way I just described that. There's probably something better than extending their license to other staff. But that is in effect what's happening. So, they do have to be very strict because their engineering license is on the line. All right, so as I mentioned, most of our structural BMPs require some level of engineering, and there is a list in the manual that you can reference to see what those requirements are. When you need an engineered design for a BMP, there are a few different options. You can contact a professional engineer, which is required for some BMPs. You can work with some water district staff who have EJAA. And if your district or your new staff and you don't have any EJAA or you don't have the sufficient level of EJAA to work on a specific component that you need, you can contact the DCR engineering services staff for assistance with whatever level you need, ID, design, certification, whatever your need is. All right, so talking a little bit about money again, participant caps. The participant cap is the maximum amount of cost share funding that any participant can receive in a fiscal year. For program year 23, that cap is $300,000. There are a few practices that the cap does not apply to, and those are the RMP1 and RMP2. Those are related to the resource management planning program, which is a separate program. I'm not really going to get into that at all in this presentation. Likewise with the whole farm approach, that is a pilot practice that still is just in a limited number of districts. So I'm not going to talk about that in any detail, but just know that those practices do not come into play with the participant cap. They don't count against the participant cap. Districts can choose to set a lower cap if they would like, particularly for districts who receive lower cost share allocations and want to be able to spread it out to more participants. That is totally fine, but a district cannot exceed the VACS cap of $300,000 per year. There is a possible exception to that through what we call a variance. And the variance process was put into place a couple of years ago, 2-3 years ago, maybe longer. But in recognition of the fact that occasionally there are practices, mostly animal waste practices, that are so large and so expensive that participants can't afford to do them, even even with the maximum amount of cost share. It still is cost prohibitive. So there is this process in place for those situations. The first thing to keep in mind is that the district has to have that money available. So it's the variance is not a source of additional money. It's gonna, any additional cost share approved through variance is gonna come from the district's VACS budget. The variance also has to be requested by the district board before the request is submitted to the DCR variance committee. So there is a process laid out in the manual that needs to be followed when you have a practice where you need to request a variance. It needs to be presented to your board. The board needs to agree to request the variance before they approve any cost share. So the board agrees to submit the request to DCR. The request comes to me as the Ag Incentives Program Manager. And then I'll talk a little bit about how that request gets processed at DCR. But the district cannot approve that amount of cost share before they've gotten approval from DCR. Eligible practices for variance mainly are stream exclusion and animal waste, and various combinations thereof, as well as the SE2, which is stream bank stabilization. So when a variance request comes in to me, I will convene the variance committee to review it. And that committee will normally consist of myself, the CDC for the district that made the request, and also the Ag BMP engineer for the area that the request is coming from. The committee has 45 business days to respond to the district. Normally it doesn't ever take that long, but do keep that in mind if you're making a request and maybe you're coming to the end of the program year or something like that. 45 business days is quite a long time. The committee can ask for additional documentation or maybe make a field visit if they feel like that's necessary for them to complete their evaluation. And as I mentioned, the district board can only approve the practice after the variance has been approved by DCR. So I have a few slides in here that just list the documentation that gets submitted with the variance request. I'm not going to read through all of them, but just know there is a good amount of documentation that needs to be submitted, and this whole process is spelled out in the manual. Applications for cost share need to be entered into tracking or CAS. We talked earlier about using the average cost list to generate an estimate for the practice, which will determine the amount of cost share and or tax credit being requested for approval. The measures and mapping of components for the BMP into the tracking program allows for the KEF to be calculated and will generate a contract part 2, which we'll talk about a little bit more in a minute. And then the tracking is where you also can write a conservation plan. And there is a nutrient management planning module as well that most district staff don't use, but nutrient management plans can be written by our nutrient management planners as well. And this is, most of you have probably seen this unless you're very new. This is just the login screen for tracking. Part of what you will complete in tracking or CAS is resource reviews. Resource reviews have to be done for any ground disturbing practices or practices with ground disturbing components. And this is a way to evaluate potential impacts of our BMP projects on other resources of the Commonwealth. So for example, threatened and endangered species or cultural or historic resources. The tracking program will automatically run the resource review query once you've digitized all of the BMP components. And then if you have any hits when that review comes back, the district staff have to follow up with the appropriate agency, and those agencies have 30 days to respond to you. Carl Leogoin is the lead for DCR on resource review issues, and there's a whole separate training. I think we had that not too long ago. Part of the conservation planner certification on resource reviews. So if you have specific questions on resource reviews or how to do those, you can reach out to Carl. And documentation of the review process and your follow-up should be maintained like just about everything else in your practice file. This is just a list of the agencies that may be involved with completing those resource reviews. So at this point, we're ready to talk about getting the practice approved. So all applications are going to be ranked. The conservation plan and the application will be brought before the district board for approval. The contract part 2, which we'll look at on the next couple of slides, and the conservation plan must be signed and dated by a board member. And then the approval date, the conservation plan date, and the required completion date for the practice are going to be entered into the tracking program. So this is the part 2, as I just mentioned. The state cost share contract is very simple. It's just 3 parts, and each part can be as short as 1 page. And so for the part 2 shows the details of the instances that are being approved, and it gets signed by the district staff saying that verifying that there's a technical need for these practices that are being approved, and then it's also signed by a board member documenting the approval. Once the practice has been approved, the district must notify the participant of their approval via written correspondence. They need to include the amount of cost share that is approved and give them a deadline for completing the practice. Approval letters can be generated from the tracking program, but I know a lot of districts choose to use their own version of a approval letter. That's fine. For practices where the cost of any one component is estimated to exceed $50,000, the bid process must be followed. So we're going to look at that in the next couple of slides. And of course, copies of correspondence, and if the bid solicitation sheet is needed, that should also be maintained in the practice file. So this is the first part of the bid solicitation form. The applicant will just fill out their information on the top, and then the information from the vendors or the contractors that they contact for bids. And on the second page, they have down at the bottom to fill out the selected vendor. If the lowest bid is not selected, they have to give a reason. They're not required to use the lowest bid, but they do have to provide a reason if they choose not to do that. And there may be cases where 3 bids can't be obtained. There are parts of the state where there just are very few contractors who do the type of work that's needed, or there may be some other reason. If 3 bids can't be obtained, that reason needs to be given here. As I mentioned, the bid process is required when the cost of any one component of a contract is estimated or equal to, estimated to exceed or equal to $50,000. If there are multiple components that are going to exceed $50,000, then the bid process has to be completed for each component. And a component would be something like a fence if there's a huge amount of fence on this practice, that the estimated cost is $50,000 or more, then the bid process has to be completed for a fence. When the bid process is necessary, the practice will be conditionally approved pending bids. And so there's a different version of the approval letter that goes out with that. The bid sheet then should be completed and returned within 120 days. As I said, document if there's 3 bids can't be obtained, document why. Same with not the lowest bid. And then final approval of the practice is contingent upon receiving that completed bid sheet. And at that point, the practice can be changed to an approved status and a final approval letter can be sent. There may be occasions where unforeseen circumstances arise during the construction of the practice. And in those situations, the producer can request additional cost share funding and or tax credit for the practice that has already been approved. This is only when there are unforeseen circumstances related to the design of the practice. So an example of that would be they start installing a watering system, and as they're putting in the pipeline, they hit a lot of rock, and so they have to reroute the pipeline, and that adds a lot of distance to the pipeline and therefore cost. So the rock was an unforeseen circumstance, so they could come back and request additional cost share for that. The district has to have the funding available to make that approval. If they don't have funding available, then the participant is out of luck. But any additional cost share or tax credit that is approved under those circumstances should just be documented in the comments in the tracking program and in the minutes of the board meeting, also including the reason for the increase. All right, we're going to start talking about carryover. Carryover is referring to how much time we allow for a particular practice to be completed. So if a practice is carried over, that means it's not being completed within the same program year that it's signed up in. And VACS practices are split into 3 categories related to carryover. The third one on the list, but the first one I'm going to mention is what we call it annual practices, or practices that are not eligible for carryover. So these are practices that are going to be signed up, completed, and paid all within the same program year. So a lot of our cover crops would fall into that category. They're signed up in the fall, planted in the fall, they grow over the winter. In the spring, they're terminated and the contract is paid out before the end of the program year. There's no need for them to be carried over, and they're not allowed to be carried over. We also have some practices with what we call 1 program year completion dates that are eligible for carryover, as well as 2 program year completion dates eligible for carryover. I'm going to talk about those and go through some examples, and the tables that I'm going to show you on the next couple of slides are directly from the manual. So the list of practices with 1 program year completion dates that are eligible for carryover is fairly short. It's a lot of the nutrient management practices. And really what this means is that these are practices that because of the timing of growing season or planting season can't be completed within a single program year. So for these practices, if we're thinking about practice that was approved in program year 23 prior to the end of this program year, so prior to June 30th of 2023, the district is going to look at all of their BMPs. If justified by being under construction, and under construction is a not really applicable term to use for a lot of these practices like nutrient management, but if the practice is on its way to being completed, the district board may take action. The district board does have to act on these carryovers to extend the completion date for another year, another program year, until June 30th of 2024. The BMP status in tracking should be changed to carryover. And for practices on this list that are not completed then by the end of program year 24, so they'll be their second program year that ends June 30th, 2024, those will be canceled. There's no further extension available. The list of practices with 2 program year completion dates that are eligible for carryover, as you can see, is much longer. And these are generally our structural practices that are larger, more complex, and that we expect to take longer to install. So for these practices, they should always be allowed a minimum of 2 program years for completion. So formal board approval is not required for them to be carried over to a second program year. So for these practices, by June 30th, the district will just need to change the status of all of those. If they were approved in program year 23, change them all to carryover status and tracking. So they automatically have until June 30th of 2024 to be completed. At the end of the second program year, again, if justified, and the wording of substantially under construction does apply to most of these, the district board can take action again, or can take action officially to extend the completion date for 1 additional year. So that would be their 3rd program year. The practice would stay in carryover status. So a program year 23 project that is not completed by the end of its second program year, that would be June 30th, 2024, can be approved by the board for carryover extension through June 30th of 2025. That'll be its 3rd program year. And that carryover into a 3rd program year should only happen if the board deems that the carryover is justified because the project is substantially under construction. If you get to this point where after 2 program years, the project hasn't even been started, it needs to be canceled. So the district board only has authority to extend the completion date for 1 additional program year, so that 3rd program year. If one of these practices is still not completed by the end of the 3rd program year, an additional carryover into a 4th program year is available, but that has to be requested from DCR on a case-by-case basis. And those requests have to come in to me by May 15th of each year. If that additional carryover is granted by DCR for a 4th program year, it must be completed by the end of that 4th program year. There's no further extension. So I'm going to quickly go through an example of an SL6W being carried over. So we're going to say that this SL6W was signed up in September, this past September, so it's program year 2023. It should automatically be carried over by the district into program year 24, its 2nd program year. If it's not done by June 30th of 2024, the district board, if justified, can approve carrying it over into program year 25, its 3rd program year. If it's still not done by June 30th, 2025, the district can request a carryover from DCR to take it into its 4th program year 26. If that's approved by DCR, the project has to be completed or canceled by the end of that 4th program year. There's no further option for additional carryovers. So districts, I won't read all of this in detail, but districts will work with their CDCs to identify their carryover needs, and district staff, as I said, need to be in contact with me no later than May 15th for any 4th program year carryover requests. And the reason for that May 15th deadline is that I need to have time to review the request and respond, and then the districts need to be able to make those approvals at their June board meeting. All carryovers have to be given or have a justification documented on the measurements tab in the tracking module. The districts, we'll look at a screenshot of this on the next slide, but districts can choose up to 3 options for the carryover justification from a drop down. And if any of those carryover requests that are coming to DCR for a 4th program year, one of the choices in tracking has to be other. And then in the comments section, the district staff need to give a full description as to why the 4th year is needed. So this is what you will see in tracking. To select your reasons for carryover, and about, I don't know, 2/3 of the way down that list is the excuse me, is the other option. And this should be updated each time the practice is carried over. There is a report in Logi, which Logi is our reporting system for extracting data from tracking. There is a report in Logi available to identify those carryover needs. Oops. So some exceptions to our normal carryover rules. If we have a partnership project where DCR is not the lead agency, which generally would be an NRCS equip, piggyback, or a CREP practice, CREP contract, we don't necessarily enforce our DCR carryover or VACS carryover rules, but districts should still be reaching out to those participants and encouraging them to get their practices completed. So once a practice is done, completed, the cost share payment can only be made to the entity, either the individual with a social security number or entity with a tax ID that signed the contract part 1 form. And this is getting back to why it's important for the information on the part 1 and the W-9 to match. Because the district is gonna make the payment to whoever signed the part 1. We cannot split a payment between 2 participants. That does happen sometimes, or it is requested sometimes, but it's not an option. The payment goes to one entity, except in the case of a 2-party check, which are only allowed for lending institutions. An IRS 1099 form must be issued to the entity that receives the cost share payment if the payment is $600 or more. And cost share payments may not be made until both the participant and the district have certified that the practice is complete and meets standards and specs. So this is the part 3. This is the final part of the cost share contract. It contains all of the information about the completed practice, the payment, tax credit, all of that is documented on here. It is signed by the participant and by the technical staff certifying the practice. Having proper signatures on all of the contract documents is extremely important. And the part 3 really is critical because this is where the participant is agreeing to maintain the practice. And there was a new policy that was introduced for program year 23 that if it is found during a file review that the proper signatures were not obtained on the cost share contract, the amount of cost share associated with that contract will be deducted from the district's allocation in the following year. So getting the proper signatures at the proper time on the 3 parts of the contract really is critical. So I think I just mentioned that the participant, when they sign the part 3, they're agreeing to maintain their practice. So every practice has a lifespan, which is the amount of time the participant is required to maintain it. Some practices are just 1-year practices. The producer can sign up for them every year, and there really isn't anything in terms of maintenance. But for structural practices where we have tens or hundreds of thousands of dollars in cost share invested, the participant has to maintain those for longer, mostly for 10 or 15 years. And the person who receives the payment for the practice is responsible for the maintenance of that practice for the full length of the lifespan. The lifespan starts on January 1 of the year following the BMP installation. So if somebody completed their practice today, the lifespan on that practice doesn't start until next January. So that is something that you want to be sure your participants understand. And it's also very important that they understand that a change in the control of the land, such as selling the land or losing their lease on the land, does not exempt them from those maintenance requirements. So especially when somebody who is leasing land is signing up, wants to sign up for a practice with a long lifespan, really need to encourage a long-term, very clear written lease in those cases, or ideally encourage the person who's leasing the land to try and get the actual landowner to sign up for the BMP, since they, at least in theory, will have control of that land for longer. We do have an option if the landowner wants to sell or for some reason wants to transfer their responsibility. We have a transfer of responsibility agreement available both for completed BMPs and while the BMP is under construction. It has to be signed by both the original participant and the new participant or the person who's taking over the responsibility, and also has to be approved by the board. This is the only way that the original participant can remove this responsibility from themselves, and the new prospective participant, let's say the original participant is selling their property. Ideally, the buyer, the new participant, will be willing to sign this agreement, but they are not obligated to. So it's really important that participants understand that they are taking on this responsibility that is permanent, even if they sell their property. And unfortunately, it does happen that sometimes a participant will pass away during the lifespan of their practice. In those cases, the district board can waive the maintenance requirement. Verifications or you'll hear them referred to as spot checks as well, are inspections of BMPs while they're in lifespan to ensure that they are being maintained and functional. The verifications are conducted annually by district staff and DCR CDCs. They are randomly selected. There's a process by which that happens. We have certain types of BMPs that we need to verify, certain percentage of them each year. So that all gets done with random generation. If you need assistance, particularly if you find a problem or a potential problem, DCR engineering services are available to help out. And additional verifications may be added by the district or by DCR at any time during the year. It's always a good practice to contact the participant and let them know if you're going to come out to check on their practice. But in the cost share contract, the participant has given us the right to check on that BMP during its lifespan. If you come across a damaged or destroyed practice, either through a verification or just, happens that you are just driving around and you see that, the stream exclusion practice you worked on a few years ago, now you see that there are cattle in the stream or something like that. However you come across it, it is the responsibility of the participant who signed the contract to repair the practice, get it back into a functional state. So once a practice is found to need maintenance or to have been destroyed, the district needs to first verbally contact the participant and notify them of the deficiency. And you'll want to, of course, document that conversation in your practice file. In addition to the verbal notification, within 2 weeks, you'll also provide written notice, so a letter via certified mail. And in that written notice, you should again include the nature of the deficiency and how much time the participant has to bring their contract back into compliance. At that time, you also want to let them know if they do not bring it back into compliance, that repayment of their cost share may be required. The district can provide the participant with up to 6 months as a grace period to bring their practice back into compliance, depending on the maintenance or the work that's actually needed. They may not need 6 months. One of the really common things is with stream exclusion projects and the watering system, over time, the stone around the concrete trough pad will get kicked away, and the concrete pad will start to get undercut, and so they need to put more stone back. They probably don't need 6 months to get that accomplished. But at the close of the grace period, the district will re-inspect the practice, and if the issue has not been corrected, again, you'll provide written notice to the participant that now they are required to repay cost share funds. And that repayment is required within 60 days. If at the end of that 60 days, they have not made the repayment and they also still have not corrected the issues with their practice, then the district will contact the Office of the Attorney General and hand it off to them to work on reclaiming the funds. I can't recall off the top of my head who the district contact is currently at the Office of the Attorney General, but there is, they do have a staff person designated to work with districts. And any tax credits associated with these practices have to be returned to the Department of Taxation. There is a formula in the manual to calculate the prorated amount of cost share that the participant would have to repay. The VACS program when repayment is required, we base that on prorating the total amount of cost share over the life of the contract, or the lifetime of the practice. And that is laid out in the manual. I'm not going to walk through this example in detail, but basically, if the participant completed half the lifespan of their practice at the time it was damaged or destroyed, then they would have to repay half the cost share for the remaining lifespan. Occasionally, a practice might fail through no fault of the participant, but due to an extreme act of nature, such as a flood or a tornado or something like that. In those cases, the participant may request a one-time additional cost share to fix the practice and bring it back into compliance. One thing to keep in mind, for the participant to keep in mind, is that does reset their BMP lifespan. So they'll have to think about whether it's worthwhile where they are in the lifespan, and whether it's worthwhile setting it back to the start. These cases have to be approved by me, and there is a whole process to go through for that, which is outlined in the manual. There's also a process for what we call hardship cases. This would be utilized in a really unusual situation where a participant would owe back cost share funds, and they've requested that the board forgive that repayment because of some unusual situation, a bankruptcy, a life-threatening illness, something like that. So in these cases, the district board will receive that request from the participant. If the board determines that they agree, basically that the circumstance makes it reasonable to forgive the repayment, then the district can, the board can forward that request and potential solution to DCR. The district board does not have the authority on their own to forgive repayment. They will consider that request and then send it on to DCR. Those hardship requests will come to me. I'll consider it with the committee and decide whether to grant hardship in those cases. So just a few notes on practice file maintenance. I mentioned a couple times keeping your correspondence, keeping a record of correspondence with the participant in the file, including written correspondence and verbal. If you have a phone call or a site visit, take the time to make a note in your file of what was discussed. You will only thank yourself in the future for having those records. You also want to have, need to have the contract part 1, 2, and 3 signed as appropriate. All of the designs, the job sheets, the as-built for the engineering needs for the practice, plans, worksheets, maps, any agreements that might apply to the practice, they need to be signed. The W-9, a copy of the check, payment calculation worksheets. Basically, your practice file needs to have complete documentation of that practice from start to finish.
And another good thing, Sarah, to have in that file are very good directions, so that 5 years from now, when we have to verify that practice and you're gone and 2 new people are there, they can find it.
Yes. I know, Debbie, you've probably seen some of those old files that just had a
I have
a photocopy of the topo quad, and that was it. So yes, making sure clear directions and that the location of the practice is obvious and easy to find for somebody in the future. Your CDC will do annual administrative reviews of a number of files randomly selected for review or for verification. And this is to the same idea as the practice spot checks, to ensure completeness, to ensure procedures are being followed. But if you are interested in what they are going to be looking for when they do this review, the form that they use, the cost share file administrative review form, is available in the glossary of the manual. So, if you want to make sure that you're maintaining your files properly and your CDC isn't going to find anything to ding you on, or if you maybe your files aren't in the best shape and you want to work on those, and kind of having a place to start and to know what you need to look for, you can access that form in the manual. And so I have a few slides here about, they're titled tax credit changes. And at this point, changes might not be the best word anymore. The changes actually go back to 2021, but I'm gonna go through this briefly. So the changes to the tax credit in 2021 increased ag BMP tax credits that were available. And this law, this updated tax credit law, was retroactive to January 1 of 2021 and goes through at least December 31st of 2024. It includes a $2 million annual total cap for the state for these tax credits. And my understanding is that we haven't even come close to that. So I'm not, it's not something we even need to worry about at this point. The tax credit system is a sort of a two-tiered system. There's a 50% tax credit option, up to $50,000 per individual for ag BMPs implemented on acreage that's included in a approved resource management plan. And then there's a 25% tax credit up to $25,000 on acres that basically other acres that are not covered by a resource management plan. There is a cap, an overall cap for any individual of $75,000, meaning if they were to max out both types, that is the maximum amount of tax credit they can receive. And these are refundable tax credits. So in either case, the tax credit is going to be based on the producer's actual out-of-pocket costs after cost share. And for these purposes, cost share includes traditional cost share, like the percentage-based cost share, as well as any flat rate payment incentives or buffer payments. So receipts become extremely important in being able to calculate accurate tax credits. There is also an equipment tax credit. This one currently applies from January 1 of 2021 through December 31 of 2025. It's a 25% tax credit on expenditures for no-till or precision ag equipment. There is some information in the VACS manual. It's intended to be somewhat generic about the type of equipment that qualifies. This tax credit is capped at $17,500 per person or per entity, and it is the responsibility of the person purchasing the equipment to determine whether their equipment qualifies. It's not up to the district or the district staff to tell a participant whether whether their equipment qualifies for this tax credit. So in order to claim it, the participant has to have a district board approved conservation plan in place and also be implementing a nutrient management plan. And there is a very short, simple form they can use to document that nutrient management planning requirement. So this is just a very brief and high level overview of tax credits. So there are a lot of forms and other details that come into play. And there were, at the time that these changes were new, a couple of years ago, there were some trainings for district staff that my predecessor, David Bryan, and some others put on that focused on some of the details of tax credits and what was new. And so those recordings, I'm pretty sure, are still available in the tracking program on the forms page if you are really interested in more details about tax credits. So finally, just a note about voluntary reporting of practices. We do, within the VACS program, have the ability to capture and report practices that farmers have done without receiving any cost share funding, or maybe those that are out of lifespan for a previous contract. They can be entered in tracking using the voluntary practice codes. There's a whole section of the manual with basically an equivalent voluntary practice code to all of our cost share practice codes. For voluntary reporting, they do have to meet the minimum specs in those in that voluntary BMP section, and the participant will have to sign off to give permission or acknowledge that their voluntary practice is subject to inspection, similar to our spot checks during the lifespan of the voluntary practice. So with that, we have made it to our break. Before we take a break, I'm going to check in with Carl and see if we have any questions that have come in.
The only question we had was about the PowerPoint and presentation being shared afterwards. And yes, they will be shared and posted for access at any time, just like previous ones have been done. So, so far that's it though.
Okay. Well, I'm going to go ahead. So it's 10:35. We'll plan to come back at 10:45 for the second half, be on the downhill slide. And if any questions come in during the break, we can take those when we first come back. So 10:45. Okay. So it is 10:45. So we'll resume. I don't think we had any more questions come in during the break. But I'll just mention before I jump into the next part of the presentation, everything I went over earlier, with the exception of maybe some of the history of the program stuff, can all be found in our manual, in the program guidelines, which I realize it's not something that most people are going to want to, sit down and read unless maybe you're having trouble sleeping or something like that. But just know you don't have to try and remember all the information in this presentation just from this presentation. It is available in the manual, in the guidelines, and of course, if you have questions or you can't find something you're looking for, you can always reach out to me or reach out to your CDC for help. So with that, I'm going to move into kind of the second half of our presentation, where we're going to go over a few of some of the key VACS practices. There are around 70 couple practices in the VACS program, So this is just going to be a brief touch on some of the most common ones. And what's common in your district is going to depend on where you're located in the state and what sort of agriculture operations you work with. So first, we're going to talk about some of our stream exclusion options. For the SL6N and SL6W, these are stream exclusion with grazing land management practices. The purpose of these practices is to get livestock completely out of the stream. So these practices require stream exclusion fencing and an off-stream watering facility. These practices also include a grazing management plan if more than 3 grazing units are created by the installation of interior fencing. This is just a basic grazing management plan. It does not have to be really intensive or comprehensive grazing practice. It's intended to kind of introduce somebody to the idea of doing a little more grazing management. The SL6N and 6W are limited to pasture land that borders a live stream Chesapeake Bay Preservation Act resource protection area, or in cases of severe environmental degradation in and around springs, seeps, other sensitive features. So the SL6N and SL6W do not apply to upland fields. They're limited to pastures that have a live stream or some feature that is being excluded. When planning or when implementing one of these SL6N or SL6W practices, any connected water features should be included in the buffer with the minimum setback distance met. The minimum setback is the distance that every point of the exclusion fence should be from the stream. So it's a minimum, not an average. For isolated features, these are features that maybe there's the farm that you're working on has a stream through it that you're going to exclude through an SL6N or 6W, and then there's also pond, and the pond is doesn't have any outflow. It's an isolated feature. Those isolated features can be fenced as part of the practice. They don't require the full buffer with the minimum setback, but the isolated feature can't be the thing that qualifies the practice as an SL6. It has to be live stream or one of the features that was listed on the previous slide. Any type of grazing or haying is not allowed in the buffer. There are pretty significant buffer incentive payments associated with these practices. And if the participant is found during the lifespan of the practice to be, flash grazing or doing something they're not supposed to do in the buffer, those buffer payments must be paid back in full. When a participant owns both sides of the stream, they have to fence the livestock out from both sides. And as I touched on in the previous slide, the SL6 practices are only for the fields where the exclusion is being done. Upland fields can be brought into the system, the watering system and the grazing system with fencing and watering facilities with an SL7, which we'll talk about in a few slides later. So the N and W designations, the SL6, the WP2, and some of our CCI practices have N and W versions. So the N stands for narrow. Those are buffers less than 35 feet, and the W is for wide, for buffers 35 feet and greater. For the reporting and crediting that we get for these practices, buffer width is very important, and 35 feet is sort of the magic number. And so that is why wider buffers, the wider buffer options have been incentivized with the buffer payments. And the narrow options only include cost share. They don't include those buffer incentives. So this is what you'll find in the manual in the SL6W spec to determine the cost share rate and the buffer payment cap that the participant qualifies for based on the minimum fence setback and the lifespan that they choose. So I'll just briefly walk through an example. We have an SL6W, the participant who's willing to do a 50-foot buffer for a total of 17 acres of exclusion, and they're going to do a 15-year lifespan. Using that table from the previous slide, the cost share rate for their practice would be 100%, and they would also receive the buffer payment of $80 per acre per year. At 17 acres for 15 years, that would be a total of $20,400. But there is a cap on the buffer payment, and so they'll max out at that cap of $18,000 for this practice. Similarly, the SL6N, it does not have the buffer incentive payments, but it has the same sort of breakdown between setback and lifespan options determining the cost share rate. And there's an example there that I'm not going to go through, but you can refer to later if you want. Some examples of stream exclusion practices, photos of some buffers. In some cases, the stream exclusion practice may be combined with a buffer tree planting practice, the FR3. You can see in the photo on the right, looks like there are tree tubes in that buffer, so that may be what was done there. And here we have some examples of properly installed waterers with the concrete pad and the stone around it at the same level as the pad, the correct sizes, looking lovely. So moving on to the WP2N and WP2W. So these are stream protection rather than stream exclusion. These practices protect streams or water features by fencing out livestock, except for at certain points where stream crossing or a hardened limited access point is used as a water source. In some situations, an alternative watering system just may not be workable. Whether there's an issue with getting power to the site or the participant, is really opposed to the maintenance that would go along with that. So under the WP2N and WP2W, watering systems are not eligible. If they want to install a watering system, you just use the SL6 practices. But like the SL6, grazing and haying are still not allowed in the buffer. And if the participant owns both sides of the stream, the livestock have to be fenced out from both sides. So you'll find in those practice specs a similar table to determine the cost share rate and the buffer payment cap that applies. And for the WP2N, cost share only, no buffer incentive. And this is the type of stream crossing or hardened limited access point that would go along with one of these practices. So if these were part of an SL6, there would be the gates on either end of the crossing that would be closed, so that the only time the cattle had access to this area is when they're being moved into the next pasture, and then the gate would be shut behind them. For the WP2, these areas remain open to the cattle because this is their limited access point for water. We also have the WP2P portable fencing system. This is meant to be a temporary system. It was designed, the practice was designed really with renters in mind, so that they are not responsible for a bunch of permanent infrastructure with a long lifespan. So this provides a portable fencing system to protect all of the live water in a field. There's no minimum standard for the fence. It just needs to function as exclusion fence. It does not provide any water, and it has a 5-year lifespan. So as I mentioned earlier, the SL7 is for farms where livestock have previously been excluded or are concurrently being excluded with a minimum either 10-foot or 35-foot setback from all of the live water, the surface water, and in upland fields where the stream exclusion practices don't apply, the SL7 can be used for interior fencing and watering facilities to further distribute grazing into those upland fields. The SL7 does require a grazing management plan that's written to the NRCS standard for all of the fields that are going to be part of the grazing system. And actually, the name of this practice was recommended by the TAC, the Technical Advisory Committee, to be changed just to make it clear that it is not only watering systems, it's also grazing systems. So it's likely for the next program year, the name of this practice will be extension of watering systems and grazing management systems, I think is what was proposed. All right, so as I mentioned, I've already mentioned that the first point, the SL7 can also be combined with CREP practices. That was really its original intention. And the SL7 has a 10 or a 15-year lifespan. If it's being installed in conjunction with a stream exclusion practice that also has a 10 or 15-year lifespan, those lifespans should match. And similar to the other stream exclusion practices, the cost share rate depends on the lifespan and the buffer width. So I'm going to briefly go over some of the CCI options related to stream exclusion. CCI, I think I mentioned once earlier, stands for Continuing Conservation Initiative. And so these practices are meant to keep track of existing practices that have already been installed while offering some help to the farmer on maintenance and upkeep. So currently there are 5 CCI options for stream fencing. I'm not going to try to read through all of that, but they basically match the cost share options for stream fencing. Plus, there is the CCI SE1, which I'll talk about a little bit more in a slide or two. For CCI, there are no minimum fencing standards or other standards required. The practices just need to be functional and effective in the judgment of the conservation planner. The practices must not be in lifespan from any other conservation program. Although if there are multiple programs involved, then the VACS lifespan is the one that trumps the others in terms of qualifying for CCI. But CCI is allowed in conjunction with CREP renewals. CCI practices are paid after the district staff has made a field visit and has confirmed that all of the components are functioning as intended. Any maintenance issues have been addressed. The CCI payment is made and it's the same whether the practice needs maintenance at that time or not. The practice has to be functional before it can be paid. But then, we make this payment based on the assumption that maintenance is going to be needed at some point during the lifespan. Practices can be re-enrolled in CCI at the end of a CCI lifespan. And like our other practices, they're subject to verifications during their lifespan, which is 5 years. All right, I'm not going to walk through all the details of this, but it basically just goes to show that somebody through the CCI SL6W could come out with a pretty substantial payment. This example works out to a $15,000 payment. So I referenced earlier the CCI SE1. This is the stream exclusion maintenance option that does not have any setback requirement. So this can be applied to fence, a situation where the exclusion fence is right on the top of the bank. And so, folks who maybe have just done that on their own can still get a payment to maintain that exclusion. All right, we're going to talk about a couple of our forestry practices. The FR1 and the FR3 are the primary forestry practices that VACS implements. To qualify for these practices, the land must have been in crop, hay, or pasture land of some sort of agricultural use for 2 out of the past 5 years. VACS does not cover replanting of timber harvest areas. The Department of Forestry does have a program for that, but our program and our practices are for land that's being converted from an agricultural use. The Department of Forestry, forester will work with the participant and with the district to come up with a plan, planting a plan for the site, the tree species and the density to be planted. Plantings have to be protected from grazing. And these practices are not authorized for Christmas tree production. That would be considered like a crop. We do have an allowance that if within 6 months, if the initial planting for the practice fails, the district must be notified within 6 months, and then cost share can be made available for one additional time to address the failure if it was due to circumstances outside of the participant's control. One other forestry practice I'll mention is the FR3M. I don't have a slide for it, but that it was new. Not sure it was new for this program year or maybe program year 22. But it is intended to provide maintenance funding for previously established buffers. And the key with the FR3M is that it only applies if the landowner is not already obligated to maintain the buffer. So, for example, we'll talk about the FR3 here in a minute. Part of what the participant is receiving payment for when they do an FR3 is maintaining the practice for its lifespan. So they would not be eligible for the FR3M. But if somebody has, maybe done a planting just on their own and it's gotten a little out of control, the FR3M can be used for them to do some maintenance. So first up, the FR1 is the afforestation of crop, hay, and pasture land. And you can think of this as generally kind of a whole field conversion or land use change for an blend field. The FR1 has a 75% cost share payment plus an incentive payment per acre, depending on the lifespan. It's either 10 or 15 years. And the FR3, the other option, the name of the practice is Woodland Buffer Filter Area. Riparian tree planting would maybe be a better name, but the FR3 is for tree planting in a minimum 35-foot buffer area from the edge of the stream. You can go up to the width of the entire floodplain. It's a 95% cost share rate plus an incentive payment plus a buffer payment. These practices are really important for our water quality goals, and so they are being very heavily incentivized. And one of the most common ways or times that they're installed is in conjunction with one of the stream exclusion practices. So if you're excluding an area that's not already forested, you can install an FR3 in that area to plant trees. All right, moving into nutrient management. So nutrient management plans are a requirement for many of our practices. Close to half of our VACS practices require a fully implemented nutrient management plan. So there are several options or methods for a producer to obtain a nutrient management plan. They, of course, can just contact a private planner and pay that person to write them a plan. DCR also has nutrient management planners on staff who will write a nutrient management plan for a participant or for a landowner. And if the participant chooses to have their plan written by a private planner, we have the NM1A VACS practice where they can receive cost share for that. Or there is a direct pay program through DCR where DCR can pay private planners directly to write plans for our farmers. So, you know, we don't want the ability to obtain a nutrient management plan to inhibit anybody from being able to sign up for VACS. There are a number of options for getting those plans. So I'm going to talk about I think just these three of our nitrogen application practices. We have the NM3C, NM4, and NM5N. The NM3C is the side dress application of nitrogen on corn at least the 6th leaf stage or at least 15 inches in height. And I think that name is going to get even longer next year. One of the another recommendation from the TAC is to include sorghum under this practice. So at this point, it is for corn only, and that's the information I'm presenting here today. But just know that that change has been recommended. This is a practice for just a simple single side dress application of nitrogen, not for split applications. If somebody wanted to do split applications on corn, they would potentially sign up for the NM5N. And the reason for the specific timing and description in this practice name is that the intention is to apply the nitrogen when the corn plant is entering the highest demand for nitrogen, and that is that 6th leaf stage or the 15 inches in height. So this slide lists some of the details for the NM3C. This is all taken directly from the spec, so I'm not gonna go through it in detail. But a PSNT test may be required depending on the source of nitrogen. This is an annual practice. It is eligible for 1-year carryover because of the timing. Obviously, corn is going to be planted in the spring, and this application and testing is going to be happening through the summer. So it's going to be, the practice is going to be split over 2 program years. The sign-up deadline imposed by the VACS program is April 1. Districts can require an earlier sign-up if they wish. Requires the participant providing their nutrient management plan to the district, as well as written verification of the cost of applying the nitrogen. And the district will need to use the nutrient management plan, balance sheets, summary sheets, just to confirm that the practice was implemented properly. The payment for NM3C is a 75% cost share rate on the application charge, up to a maximum of $6 per acre. For producers who apply their own, which is not uncommon, they automatically just receive the $6 per acre rate. We also pay the $6 per acre for acres that receive a 0 application based on a PSNT. PSNT is a pre-sidedress nitrate test. But so we want to recognize that they have done the test and they are following the recommendation, even if that recommendation is for 0 application. So they do still get that payment. And then the PSNT samples are reimbursed at a rate of $12 per sample. The NM4 late winter split application of nitrogen on small grains. This practice, as the name suggests, is for applying nitrogen during the late winter in 2 increments. The participant has to do two applications following their nutrient management plan recommendations. If any fields that have received organic nitrogen, they'll have to do some nitrate testing, and the rates for the 2 splits are prescribed in the manual. This is an annual practice. It's happening over the winter or into the early spring for payment. So it doesn't need to be carried over. It's not eligible for carryover. The sign-up deadline is February 1st. Although again, districts, if they want to require an earlier sign-up, they can. And again, participants must submit their nutrient management plan and written verification of their application, of their nitrogen application. They only receive payment for acres that actually receive the 2 split applications. If only 1 application is made, then they don't get paid. So the payment rate is 75% cost share on the application charge, up to a maximum of $4.50 an acre. And that's taken on the cost of the second application because they've got to have that second one to qualify. And their soil nitrate tests are reimbursed at $8 per sample. The NM5N is you could say a higher level of management of nitrogen, precision nutrient management for nitrogen application. So this practice, there are multiple different technologies or approaches that are included under this practice that can be applied for row crops, specialty crops, small grains, and for highly managed hayland. So all of the applications, the nitrogen applications for this practice, have to be based on some sort of test results. And fields that have received biosolids within the past 2 years are not eligible. The test results will be used to develop a prescription for the nitrogen application. They have to follow that prescription, and they also have to be fully implementing their nutrient management plan. So I mentioned there are multiple technologies or approaches lumped under this practice, including variable rate applications, zone applications, 2 or more applications on highly managed hayland, and injection. So just a note to read the specs and make sure you're choosing the appropriate spec for what the producer intends to do. The number of splits they plan to make, and also just a note there that a starter application of nitrogen does not count as a split. For the NM5N, all the split applications will be applied at the highest demand growth stage. They have to wait at least then 14 days for each subsequent side dress. And the total nitrogen rate on corn cannot exceed 1 pound per bushel of expected yield. Again, this is a an annual practice eligible for one program year carryover because of the timing of the growing season. The sign up deadline is April 1, and again, requires the nutrient management plan and written verification submitted to the district. The final payment is going to be based on the total acres that were sampled and that received applications according to the rates that the test results indicated. So it's a 75% cost share on the application charge up to a maximum of $8 per acre. Again, any acres receiving 0 application based on a PSNT do receive that payment, and cost for the PSNT or soil nitrate tests are reimbursed at $12 per sample. No, at this time, no per sample cost share is available for zone soil fertility tests. Our other nutrient management practices, the NM5P, it's very similar to the NM5N, except it's for phosphorus applications. Again, this practice supports multiple technologies for the same types of crops under the NM5N, requires test results to determine the application rates, and excludes fields that have received biosolids in the past 2 years. So for the NM5P, zone or grid fertility samples must be utilized, and those results then used to develop a phosphorus prescription. That prescription must be followed, and the participant must be fully implementing their nutrient management plan. The sign-up guidelines are essentially the same as the NM5N. And same for payment based on the total acres that were sampled and received application based on the rates determined by the results. 75% cost share on the application charge, up to $8 an acre. Also applies for 0 application rates. And again, no per sample cost share for the zone or grid soil fertility tests. All right, moving into some of our cover crop options. I'm gonna briefly touch on these 6, but what most of them have in common. They're used to establish a vegetative cover on cropland to reduce erosion and loss of nutrients. They're annual practices, so somebody can sign up for them every year. Participants have to choose to receive cost share or tax credit, but not both. Most of the cover crop specs prescribe types of seed, seeding rates, planting dates. And a nutrient management plan is required. No nutrients are allowed to be applied at planting, and there will be multiple field checks needed during the practice lifespan, checking for cover early on in the season and then again at the end of the season. So first up, we have the WQ4, our legume-based cover crop. Legumes, of course, are used as a natural, natural source of nitrogen. This practice is paid at a $45 per acre flat rate payment or tax credit. Grazing and or any method of removing the crop residue, the cover crop residue, is not permitted. The WQ4 cover crop must be left on the surface and not incorporated to serve as mulch for a no-till planting. The SL8H is the harvestable cover crop option. It requires 60% cover to be maintained, but does allow harvesting after March 14th. Doesn't require harvest. It can be left on the field if they decide to do that. Manure is allowed to be applied on up to 300 acres, but there are certain conditions in the manual that have to be met for that to be allowed. It's a $20 per acre flat rate payment. That's a lower payment than a lot of the other cover crop practices, but that's because in this case, the producer is able to harvest the cover crop, and so they're getting additional economic benefit from that, as well as potentially reducing some of the environmental benefit that might be that we might see from leaving the crop on the field. The SL8 is a protective cover for specialty crops, so vegetables, tobacco, small grains. The seed has to be certified by November 30th, and this one is a little different from the others. It doesn't have a particular date, but just that the cover must remain on the ground for 90 days after certification. It can't be harvested, has to be left on the field, either incorporated or not, and receives a flat rate payment of $40 per acre. The SL8A is called a catch-all cover crop spec to reduce erosion. And the idea here is that it's incentivizing producers to have cover on a field when maybe they wouldn't be able to, or they normally wouldn't plan to otherwise. So particularly in a situation like after a crop failure or some sort of storm damage or something like that has messed up their normal plans, and they just want to get some cover on the field. It can also be used for summer cover crop. The timing of our other cover crop specs doesn't allow for summer cover crops, but the SL8A does. So within the spec, you'll find that there are different species lists for different times of the year when the cover crop is being planted. It has to be planted and certified within 45 days after the crop has been harvested, the previous crop has been harvested or destroyed, whatever the circumstances may be. Seeding has to take place between March 1 and November 15. And 60% cover must be maintained for at least 60 days or until the conservation purpose is served, whichever is greater. And again, cannot be harvested. So the payment for the SL8A is a variable rate based on the number of days that the cover crop is going to be on the ground after it's reached that 60% cover. So when the farmer is signing up for this, you want to take into account their plans for the maximum number of days that they think they might leave this cover on the ground, so that you can get them approved for the proper rate. Right, so SL8B, this is sort of the go-to or the standard cover crop option. It gets the most credit in the Bay model. It's a fall over the fall and winter cover crop. And it's intended to establish cover to reduce erosion and nutrient loss, as well as to take up as much residual nitrogen might be remaining from previous crop, and store that in the plant rather than making it available for runoff into the environment. So for the SL8B, no nutrients are allowed between the harvest of the previous crop and March 1 of the following year. And the producers have to be implementing a nutrient management plan on the SL8B acres that they want to sign up. There are a variety of options for eligible species to be planted. There's no minimum seeding rate that's required, but if you have somebody who's going to do something like aerial seeding or something that might result in a lower seed to soil contact, just make sure they understand that they've got to have that 60% cover, and so they may need to increase their seeding rate to make sure that they get that. The SL8B includes a bonus payment for certain varieties of rye. This is the list that's currently in the manual. Any other indeterminate growth tetraploid rye cultivar is also eligible for the rye bonus. But if there's a particular variety that you think needs to be added to the list, you can send it to the TAC, Technical Advisory Committee, which you can accomplish by just sending it to me. Planting dates for the SL8B. These planting dates were updated just, I guess, 2 years ago to take into account some of the warmer climate trends, corn remaining on the field longer. So currently our early dates are either November 10th, October 20th or 25th, depending on where you are in the state. And the standard are later in November. So for the SL8B, 60% coverage has to be established by December 15th. The district does need to go out and check that and confirm that that's been achieved. The 60% cover is required to be maintained through March 14th. And they are allowed to graze or to pasture their cover crop as long as they maintain that 60% cover. Harvesting of the SL8B cover crop is not allowed. If the producer thinks that they are going to need potentially need to harvest their cover crop, they should just go ahead and sign up for the SL8H. The cover crop has to be terminated by either by grazing, mechanical means like the roller crimper here, or chemical means no earlier than March 15th and no later than June 1. And they have the option to incorporate the residue or just leave it on the field. The SL8B has a tiered payment structure. So there's a base rate of $40 per acre. There's an additional $30 bonus for planting by the early planting date. And there's an additional $20 per acre bonus available for planting one of the qualifying rye varieties. So up to $90 an acre available for the SL8B. And finally, a new practice this year is the SL8M, which is the small grain and mixed cover crop for nutrient management and residue management with fall manure application. So this is similar to the SL8B, but it allows manure to be applied between the harvest of the previous crop and March 1 if certain conditions are met. So you need to refer to the practice spec and make sure that your producer is meeting those conditions. There's no harvesting of the cover crop allowed under the SL8M. And again, it has a tiered payment structure, much less than the SL8B because the applying manure reduces the amount of credit that this practice receives. But it has a $15 per acre base rate, $22 per acre early planting bonus, and an $8 per acre rye variety bonus. A few other common or key practices. The SL1 is long-term vegetative cover on cropland. This is a conversion practice or a land use change. So it establishes grass and or legume vegetation on cropland with an existing cover of less than 60%. There's a 3-year minimum cropping history required, and a choice of lifespan, 5, 10, or 15-year options. And I mentioned this one earlier as an example of a practice that has a combined payment structure or payment types. It has a 75% cost share rate plus an incentive payment per acre, with the amount depending on the chosen lifespan. SL 11, permanent vegetative cover on critical areas. So this is for stabilizing critically eroding areas to reduce sediment nutrient loss from the site. So it allows grading, shaping, grass or tree establishment, but is not to be used in an area where there's concentrated water flow. And this is just a 75% cost share rate and a 5-year lifespan. In contrast, the WP3, the sod waterway, is what the practice you would want to use if you have similar goals, but in an area where there is concentrated flow. And the WP3 sod waterway, I think I have another slide to compare these, but it does require potentially some engineering. So yeah, here's a comparison of where you might use these two practices. So on the left, you can see there's obviously some concentrated flow happening. So the grass waterway would be the appropriate application there, versus on the right, there's some kind of denuded area, maybe a feeding area or something like that, that could be with maybe some light grading and just establishing vegetation could be addressed. Right, moving into the WP4 suite of practices, animal waste control facilities. So these are planned systems for managing liquid and or solid waste from areas where livestock or poultry are confined. Remember that the least cost technically feasible standard or philosophy applies here. So there are cases where maybe just moving the feeding area would solve the problem. So make sure when you approach these practices or potential practices that you are considering all of the least cost options that might be available to the farmer. These practices are planned for the number of livestock that are present at the time that the facility is being designed. In other words, we don't plan for the farmer to expand their operation, expand their herd, or build a new poultry house or something like that. And these WP4 practices have a 15-year lifespan at 75% cost share. A couple of years ago, we expanded the WP4 suite. Previously, a lot of options were kind of lumped under that WP4 spec, and so we now have the WP4 LC, LL, FP, and SF. We also, in this program year, program year 23, added 2 CCI, continuing conservation initiative practices for animal waste, existing animal waste facilities. So a CCI WP4 as well as a CCI WP4C for composter facilities. And these WP4 options, there are options for a seasonal feeding facility, for just a feeding pad, for non-bovine low-feeding lot systems, and then for a situation where the only solution is to have livestock fully contain the WP4LC. So just some examples of practices that might be done under the WP4 suite. A bedded pack facility, before and after. a litter shed and a composter. It's a drum composter up at the top right. A manure lagoon, a gigantic manure lagoon. So the WP4B, which is not mentioned on the previous slide, is the dairy loafing lot management system. Similar requirements to the WP4 for dairies only. It provides a loose housing facility plus a minimum of 3 grassed loafing lots. Freestalls are not considered least cost technically feasible. And the WP4B has also a 15-year lifespan and 75% cost share. So here's an example of what that might look like. A dairy bedded pack facility. And then finally, I'm just going to very briefly talk about CREP partly because I'm still learning a lot about CREP myself. But CREP is a riparian buffer program that involves several different agencies. FSA, the Farm Service Agency, is the lead agency for CREP. They work with the producer to determine eligibility and drop the federal contract, and they pay the federal funds to the participant. NRCS does some of the field work and planning for CREP practices, Department of Forestry. If there's a riparian forest buffer component, they assist with the planning of that. And then the district does sort of the normal VACS side of things with getting a Part 1 signed, entering information into the tracking program. Funding for CREP practices is requested through the tracking program, and those requests come through me. And then there is a state portion of the payment that the district will issue, and that the district will maintain a practice file for practices as well, just like they would for any other practice. So if you have questions about CREP, please feel free to ask them, to contact me. Like I said, I'm still getting my feet under me with CREP, but certainly will, if I can't answer your questions, we'll help you out and get an answer for you. And so with that, I'm done with my presentation, and we can answer any questions that have come in.
Sarah, we do have one from Jonathan Woolbridge.
Okay.
Can freestalls be installed later on, or would need to wait until after out of lifespan?
So I think if this is something the producer wants to do, knowing they can't get tax credit for them, there might be a way to design the practice. I don't know. I might have to think about that and confer with the engineering team. You know, normally if somebody wants to, if they're going to get cost share on a practice and they want to, you know, add on some components that are not eligible for cost share, that generally is okay as long as they understand they are responsible for the full cost of those additional components. But I'm not sure how that might be able to work with a freestall setup. If they wanted to install them after, you know, after we've come in and done whatever the cost shared practice, you know, as long as they're maintaining all of the manure storage that they need, that probably would be okay. But I would work with the engineering staff to make sure they weren't creating a situation we wouldn't want them to do.
All
Is there
right,
any
so
other-
that's the only one in right now. If anybody else has any questions, now's the time to ask.
Well, as I mentioned before, this is all of the information I went over about specific practices is in the manual, just like the guidelines information. But of course, if questions come up that you can't find an answer in the manual, or you just need to make sure of something, always feel free to contact me or your CDC or whoever to get it resolved. We're happy to help.
All right, I don't see any others coming in the chat yet. Just a reminder that this does count for those working on their DCR Conservation Planner certification. This is one of the classes required for that. So make sure you log today's date for attending today. Also, be sure and keep up with your emails for training updates, and there'll be more information coming out on not only conservation planner certification trainings, but some other trainings that are going to be held this year as well. And Sarah, unless you have something else, I'm going to invite us to go ahead and close and adjourn for today.
Nothing else. Just thanks everybody for attending and hanging in there.
Yep. Thank you, everybody. Thank you to the Soil and Water District Association again for hosting the Zoom for us and the recording and all that good stuff. So thank you very much. Everyone have a good day.